Rent growth was huge in 2021 and early 2022, but price growth for single-family homes was enormous. A lot more. You can see the charts of that just show how much. And I don't have them on. I don't have them on a link, but I'll provide it in the show notes. Home prices outstripped rent growth by an enormous factor. I think that high mortgage rates maybe have driven some people into the rental market at the margins, but it's more useful, I think, to think about sinking single-family home prices as a product of lower housing demand and lower household formation, which fell from 1.5 year-over-year growth in Q2 to 0.96 by September. It fell really quickly in a short amount of time. That may or may not be, a direct effect of interest rates, or maybe a bounce back from previous highs. But that's just this year's growth, and you can, and it's almost hard to see because of the chart is so expanded from like the 70s that we have on display here. But there's a short spike downward close to the end, and that's where that's kind of where we're living right now is this downturn in household formation. I think that there still is a housing supply problem, but single-family home price softening is something that really started happening in 2022. Seemed almost impossible. It seems they still are stubbornly high, and I think that this is a trend in 2022 that is worth mentioning, also because I think it will extend into 2023.
Well, the question we've been asking ourselves, Matt, is how much demand was borrowed from the future in 2021, of where people were just making big decisions. They're buying houses, moving around, create a lot of demand. There's a lot of mobility. Even their retention rates went up, which created the situation where rents are rising because there wasn't a lot of availability. Yeah. Occupancy was very high, to where all of a sudden we have a pending recession and people have already made big decisions. They've got some decision fatigue, but also just people don't make decisions in an uncertain environment. And so demand just fell off. Yeah. Completely. Lowest demand in decades. So the question is, is demand being pent up because people are putting off these decisions? Is it being pent up for sometime in 2023? I think as late as 2024, but I think we're going to see a slow start to 2023, but I think it's going to pick back up kind of middle of the year, barring we have a blockbuster recession that cools things again. Yeah. But people in the pandemic, it was a recession and people were losing their jobs and the market just took off. Yeah. So weirder things have happened, and I don't think that this recession is going to be like your typical recession. I don't know what that even means. But like, what do we call this last year? I mean, I guess stagflation. I mean, stagflation. We've had growth lowering with inflation. It's stagflation, but it's technically not a recession. We had 2 negative quarters of negative GDP growth, but it's not a recession for some technical reasons.
Maybe it's a tropical depression.
Yeah, that's what it feels like. It's like, hey, it's not a hurricane, but like it could be any day. Yeah. That's a really good way to describe it. But like, this hasn't been a good year. The stock market's down 20%. Values of every asset class are way down. Yeah. But I think everyone just has a sense like we haven't gone through the appropriate amount of pain.
And I think that there is a strange lingering optimism after a great recession that was extended so long, and people's attitudes were so horrible.
In reference to like 2008 or
from 2008 to 2018 almost. That's like 10 years where people were not thinking.
Yeah, people were still had hangover from 2008 in 2018. Yeah. People were starting to get over it.
And we're still starting to get over it. Yeah. I think that one of the big things for the single family home market is it goes back to interest rates. It is they're paying for less. Their mortgage they're paying for less home than they could.
Yeah.
And that has dampened prices. I think, again, another thing that gives me a little bit of pause and makes me think that maybe the home prices still have some room to fall is that housing sentiment is still very low.
Yeah.
The buyers are not buying necessarily. Sellers aren't budging yet because they don't want to sell, because then they're going to have to buy a new one at higher interest rates. So maybe something won't give, but if it does give, then we've got a little bit more price drops to see in single family home prices in 2023.
He's right. I mean, there's still not a lot of inventory.
Yeah.
So people who need to sell, the prices are coming down because people can only afford to pay so much. But at the same time, you have investors of single family homes that are, all of a sudden, hey, if it cash flows, if I can pencil it, I'll start picking up. So there's a lot of buyers for single family homes, and the demand is there. And I know there's a ton of buyers who are just on the sidelines waiting for it to make sense. And they don't necessarily care as much about their interest rate as but to your point, what they can afford and the amount of space that they have and what can they get.
Yeah.
I think that is going to lead to more renting in the short term. But I don't see a recipe for the market to fall out.
Yeah.
I see opportunity for a very appropriate and healthy correction and a little bit of a mean reversion.
Yeah.
Because it's okay. Well, so homes were up 30 to 40%. Well, now they're going to come down 20 to 30%, and so they're up 10. They're still up quite a bit.
There's still a bedrock of demand.
Yeah, and I think that'll be in the extreme, some of the more volatile markets that have saw some of the bigger swings, like maybe your Tampa, your Phoenix, Nashville, Atlanta.
Getting a couple more things, and those are the last two items. But first, I did want to note, along with the single-family home market softening, yes, rent growth has normalized. We've had an incredible amount of rent growth, really from kind of late 2020 to early 2022. Clearly started to slow down in 2022. And the phrase reversion to the mean is an abstract term that maybe shows what it looks like.
It isn't.
Yeah. It shows what it looks like.
It's abstract, but it's also, you can also I can plug it into my Excel model.
Yeah. You can see what it looks like mathematically, but it doesn't really explain the reasons why there's a reversion to the mean. And I can speculate
if this is not a reversion of the mean in household demand, what is? Mm-hmm. Look at these periods, and bam, right there in the center.
Yeah, I think that does explain kind of what is happening. But in terms of observable reasons why this normalization and this reversion is happening, I think, pressure from interest rates, renters, but also this very simplified idea that renters before were willing to pay a certain amount of rent, and they've reached a ceiling. I think inflation has a lot to do with it. There's higher expense costs, and it raised rents outpaced wages for a certain amount of time, and now they're just reaching that ceiling.
It's the fatigue. Mm-hmm. Yeah.
And so this could be really seen as a natural market force where rents are reaching this point, and the party is a little bit over. But that, and also in saying that, it was a very crazy,
because people
party.
What led to that was we're 100% occupied, so we should raise our rents because there's obviously this much demand, and you raise your rents. I don't know. Let's raise them $50 a month. Okay, well, that seems like a lot, but let's do it. And then that unit comes up, it gets leased right away.
Yeah.
The next one will raise it another 50. There's no way, it's too high. Then it gets leased up right away. Mm-hmm. And so you keep thinking that you're in the ceiling. You're like, well, let's try again. We're still 100% occupied. We only have one unit available, and people keep signing leases for more and more and more. And you're just, if someone didn't sign the lease, you'd say, all right, let's keep it where it was, or let's bring it back down. Let's find right where the market is. And so that led to people kept pushing and pushing and pushing. And then even when the music kind of was slowing down and stopping, people were still kind of catching up because a lot of people didn't move to the market back in end of 20 and through 21. So they're playing this catch up, but then all of a sudden they found themselves in an environment where demand had, the spigot had just been turned off. Yeah. And it's not working. And so now they're having to bring back their, rents back in line, something a little bit more reasonable.
Yeah. The lights went off.
Yeah.
Yeah.
Because occupancies are no longer, as nearly as tight. We're back to more historical averages in terms of occupancy. We usually are, as a nation, each market is different. It's, around 94 to 95. But, we were at like 97 nationally.
Yeah.
That's a lot.
Yeah, and I think normalization is a really accurate term here, because it's not like we're getting into a dangerous spot. We're still, in terms of like vacancy, we're doing great.
Looking good.
And I don't want to downplay this last trend that I've kind of identified more than any others, but but only because it's less prominent this year in my list. Am I talking about it last? But the housing supply and demand imbalance has persisted, despite rent normalization or housing price cooling off. There is still not enough homes, and demand for those homes is still high.
But Matt, what do you mean? There's over 1 million apartments under construction today.
Under construction is a great way to say not finished.
Not available.
And the problems that we've had with construction and timelines getting extended, they still persist. I think that probably they're being solved now.
Yeah.
But expensive materials and expensive labor costs, they're not all gone. And that means that some of these projects are gonna be maybe 1 or 2 years longer than they could be.
Or some, I think some of them are going to get scrapped too, because I think they're going to look at their new pro formas and they're going to say, guys, this deal doesn't pencil anymore. We can't build this. I think that there will be some cost saving measures, especially if there is a recession, maybe, the cost of labor comes down, or at least it's more available. I think part of the problem is you just couldn't get scheduled, with your builder or whoever, or your subs. But if, maybe they become more available. We shall see. Maybe it's an opportunity to build, but under construction doesn't mean delivered. Yeah. And those times have been pushed out further and further because of all those reasons.
Yeah.
We need the new supply.